Hey everyone, in this video, I'm going to bring you my top stock to buy now in April of 2024. I'm going to highlight what this stock is and why I'm recommending it and why I like it as my top stock to buy right now. So without further ado, let's take a look at what this excellent stock is.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, my top stock to buy right now is Google, Alphabet. The stock has performed relatively well so far in 2024. It's been my top stock to buy all year. Remember, December 30th, December 31st, I recommended Alphabet as my top stock to buy in 2024, and I've kept it rated as my top stock to buy all year. Alphabet so far has returned 11.03% for investors that followed that recommendation when I made it. That's a really strong rate of return. I'm truly happy with that kind of return in just one quarter. I would be happy with that kind of return for a full year for most stocks. For Alphabet, I'm looking for a little bit more than 11% for the year. I do own Alphabet stock, and if you compare it with the S&P 500 ETF, the company is outperforming. So my top stock to buy is outperforming the S&P 500 ETF by almost 100 basis points or 1%, 11.03% versus 10.14%. So I think Alphabet has more room to go. Let me share why I think that's the case. So Alphabet's revenue growth has been phenomenal over the last decade. 307 billion in revenue in the trailing 12 months. That's up from around 70 billion in revenue in 2015. So a more than 4x increase in Alphabet's revenue over the last decade. And it's done so primarily by offering free products. That's an excellent customer value proposition when you can offer free products and generate hundreds of billions of dollars in revenue. That's a difficult feat to accomplish, and Alphabet has managed to do that very, very well. And not only is it generating $307 billion in revenue by offering free products, it's doing that at lucrative profit margins, right? Because anybody could offer free products and generate 300 billion in revenue, right? Customers love free products. You make a product, you make an excellent product, and you offer it for free. Customers are lining up to get it, but you'll do that and you'll lose a lot of money. That's what many companies are doing right now. There are selectively few companies that are generating hundreds of billions of dollars in revenue by offering primarily free products and doing so very profitably, which is what Alphabet is doing. Its operating profit margin in the last decade has been above 20% almost entirely. It's been above 30% briefly, but in the mid 20% average for the previous decade, and most recently 27.42%. And if I had to forecast where this margin goes over the next 3, 5, and 10 years, I would say it goes higher. Remember, Alphabet announced major layoffs last year, and those layoffs are going to lead to better profitability for Alphabet in the near and longer term. I also like its prospects in artificial intelligence, although initially the company has fumbled the rollout of AI. Although I do think AI is going to be fundamentally positive for Alphabet in the near, medium, and longer term. The company's in a prime position to benefit from that trend and offering its own AI model that rivals that of OpenAI's ChatGPT. And so all of these factors are working in Alphabet's favor alongside its strong position in the advertising industry. Google, its search engine, has a greater than 80% market share of search engine worldwide. That's a dominating business model. And then YouTube, of course, you're probably watching this video on YouTube, has over 2 billion monthly active users, and it has content available for free essentially for Alphabet, right? Alphabet is not paying me to create this content. I'm creating this content on my own and uploading it to YouTube. And then if it does generate advertising revenue, Alphabet and YouTube will share some of that with me. But if it doesn't generate any revenue, I wouldn't get any revenue from YouTube, and the company would just have more content on its platform, attracting more users. That user-generated content business model is a really strong business model and one that I'm certainly attracted to. Several companies that follow that model I have rated as strong buys right now, including Alphabet, but also Meta Platforms and Snap and others that basically get users to generate the content for them at zero or very low cost, and then they get to generate billions in revenue off of that content that's created by users. I really like that business model. It's very lucrative for these companies that can generate revenue off of that business model. Additionally, that business model has helped Alphabet generate strong returns on invested capital, and that's been growing higher since 2015, where it was at around 14%. Now it's up around 26.34%. This metric measures how good a company is at generating returns on the capital that it invests. Investors give this company money. The company uses that money to create products and services, and the difference between what it needs to give investors and what it generates in profitability is that return on invested capital. And that's, generally speaking, anything above 10% for a company like Alphabet with the risk profile of Alphabet is very good. Now, more specifically speaking, the return on invested capital needs to be above the weighted average cost of capital in order for investors to have an increase in shareholder wealth. And that is what Alphabet is doing. I won't get into those details. That's a more advanced finance concept. We'll just look at it more generally. And with Alphabet, if it generates an ROIC above 10 to 12%, then as an investor, you're increasing your wealth as Alphabet uses that capital effectively. Now, looking longer term or looking at its prospects over the next 5 years, analysts on Wall Street expect Alphabet to generate 19.25% earnings per share growth per year over the next 5 years. That's an excellent rate of increase for earnings per share for 5 years. That's well ahead of what analysts expect the S&P 500 earnings per share to increase at 11.16%. So Alphabet is going to grow profits much faster than the S&P 500 companies will grow profits, and that's an excellent 19.25%, especially when you consider that you're able to buy Alphabet stock right now at a forward price to earnings of 19.9. So you're almost getting more earnings per share growth at 19.25 than you're paying in PE at 19.9. And generally speaking, when I see an earnings per share growth forecast at or near or above the PE ratio, that looks like a very attractive investment to me. And a company like Alphabet boasting that kind of growth prospect at this valuation is really attractive to me, and that's one of the reasons why I have Alphabet rated as my top stock to buy. All of the other reasons I discussed in this video on why I think Alphabet is my top stock to buy now, and it has been all year long. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.